Joining me now is Amanda Wolverton. She's a venture advisor and investor. Joining me via Zoom. Great to have you on the show.
Good afternoon.
Good afternoon. So we see, although 44 startups secured funding in July, the total raise was just $102 million. What does this tell us about, investor sentiment in Africa's startup ecosystem today?
It appears to me that investment sentiment is extremely cautious. And this is not specific to Africa. This is reflecting globally. If you need to get money, you would need to have hard assets, infrastructure, energy assets. Founders cannot rely only on growing user base if you have a software venture or AI applications. Not only that, the questions were asked: how do you make your ROI, your cash flow? This question was asked across the board on the street. If you have heard about the latest report on SpaceX, and after a blowout revenue increase, that the stock actually dropped 10%. This is because investors are asking, you're making so much CapEx investment, how you're going to make the money back, and what is your cash flow? So this sentiment reflected into VC's scrutiny into startups as well, that they are not satisfied with investing into future dreams, but also want to see consistent cash flow as well as a defensible business model.
And we see one of the standout trends was the lack of equity financing. Why would you say investors are increasingly favoring debt and grants or alternative funding over, taking equity stakes?
This is absolutely a reflection of a risk-averse sentiment of VC investor, but also reflected macroeconomics that the 30-year treasury now is at about 5%. And investors can get a much better return on a risk-free debt, so they are less likely to invest in ownership of a high-risk equity. But not only that, because of the geopolitical uncertainty, global investors are retreating back into their home base, so they're increasingly risk-averse in terms of investing in a market where they see potentially have higher geopolitical risk in Africa. So the overall impact to the ecosystem of startups in Africa is that this trend of increasing scrutiny as well as risk-averse is going to continue. So it's not going to end in July or end of this year. As I see it, that investors, the winning strategy for founders of startups need to be not to chase the valuation hype, but to focus on driving profitability, cash flow, and then making a debt-worthy economic unit economics.
All right. So, what are you seeing? In the second half of 2026, do you see the slowdown continuing? Do you see investors favoring debt more than actually taking equity in some of these businesses?
In my view, the trend will continue, and this is not just reflected in Africa, but across global investment spectrum. Investors will continue to ask about how the AI investment is going to get me ROI, and then this is probably going to be more acute in the second half as more and more capitals are going to be rushing into a few big IPOs that are coming up or planned on the street. So if they can invest the capitals into the bigger IPOs, they're probably less likely to put money on the global scene into a higher risk startups, especially in areas that are more geopolitically prone to risk.
So, definitely, I know you do interact with founders a lot. What's your advice to that founder watching, right now that's, trying to take their business to the next level? What's that cheat sheet you give them right now?
I think there are two areas I need to focus on. One is to build a moat around your business model, make sure that your business model is defensible. And the second piece is to really make sure that you actually build a long-term plan for a more profitable, cash flow, consistent business rather than trying to chase the investors' pitch, hoping that you will get a cash falling from the sky, because that's less likely to happen in the second half. And then also, this is not necessarily a bad thing, because the ecosystem in Africa is going through a maturing process, even though it's painful, but it's necessary. Because a couple of years ago, the valuation, there was a venture boom, and the valuation were incredibly high. But now in 2026, it's being reset to the real value of the venture, what the market value of what the venture actually worth in the marketplace.
All right, thank you so much, Amanda Wolverton, a venture advisor and investor. Thank you for coming on the show today.
Thank you.